Hey, good evening, everybody. Um, just waiting a bit, see if some people want to step in, and we can get going. Seems like we got a lot of movement so far in the futures market, specifically the metals. Mm. So I guess let's take a bit, let's lock in a bit, let's see what's going on. Um, let's take a look at what happened last week. Um, see what we can find into this week. And move on with what makes sense for the upcoming week. I want to really um, just make this adjustment. My screen is so blurry, I feel. That's much better, yes. No, that's not what I said. All right, that's good. That's done. So if we can start from the top, I really want to take a macro view on this because I think that's the main like thing of importance right now. Um, and boy, oh boy, silver's still going, baby. Um, so right now, I can say this, right? Let's take a look at this actually. This show screen. Oh, you gotta be kidding me. You're telling me to quit to allow it? It's not gonna allow me to share my screen on the stream. Oh my gosh, you guys are making this so difficult, eh? That's what you wanna do? You wanna make things difficult? I could share a tab though, huh? Okay, let me see if I could just create this tab. All right, that'll do. But essentially, what we've got here is a peek on a few things, and I want to take a look from a point of view of everything. So, if you look at what happened, basically this past week, Bitcoin kind of rallied up off the 38.2 Fibonacci bounce that we saw. Something kind of cool. Good to see, some kind of life out of Bitcoin after falling off a cliff from basically early last year into now. And that's something super good to see. But basically, with rising geopolitical tensions and stuff, that kind of no longer is a thing. That's not really all that available per se. Let's see if I can log in. Oh, nice, it logged in. Got tons and tons of news going on right now. And with all that being a situation, like it's a lot of stuff going on that I think are of deep importance right now, and at least into the markets. So we should take a look. First things first, this whole Greenlandish issue is way bigger than like what I think. And it's way bigger from the point of view of like people talking about it, but it's not big at all. I don't think it's that big of a deal. I don't think it really creates an issue. I'm hearing talks now that we put out a tariff on European countries, basically supporting Greenland and supporting Denmark in blocking the attempts for the U.S. to seize the land and so on. I think from that point of view, I think the biggest point of view that actually matters are the people of Greenland. That's like the potential main change here. The people of Greenland being in this like limbo zone where they are, being protected by Europe in that case, and then and that's basically it. So I think that's probably the main confusion there, and like we get to understand it's like why Trump wants to take Greenland. Obviously, like there's tons of industrial work that I believe that gets done there. Something along the lines of a ton of the actually a lot of drugs get developed there. 74% of all insulin in America comes from Denmark. I saw some other reports saying like 15% of all shipping containers coming in America are from Danish companies, right? And close to 100% of the Ozempic actually used in America comes from Denmark. So that, the medicine point of view, the 74% of all insulin and 100% of Ozempic, that is crazy to think of as that being the number. But the EU is saying they're preparing preparing like 93 billion euros worth of tariffs and other restrictions as a way of fighting back on Trump's tariff news. And also the crazy other piece of it is that um, it seems as if Trump has Davos this week, or not Trump, but like the Davos event in Switzerland happens this week. So he's gonna be in the EU this week, right? All while this news is breaking out this week, and we're facing a short week as well, with tomorrow being a holiday, a market holiday, for Martin Luther King, um, and and there's a lot still that can happen even in this shorter 4-day trading week. The other piece of it that I guess is something to note is how this is affecting the macro, right? So we got Bitcoin taking a crack, down 1% and change. I think at open it was down 2%. It's bid up a little bit since. The dollar, who's been kind of slowly basing a little bit around 97, 98, did do a little pullback just below the 99 threshold, um, as we're seeing here now. Right, the dollar did get a little bit weaker based on this whole tariff issue and the tariff news and the other questions that are coming down the pipeline, or the pipeline, sorry. And we also have, Nasdaq crack a little bit. I mean, sorry, this is the S&P. S&P 500 crack a little bit. We're down. Damn, we're down half, basically 70.75 a basis point. Nasdaq also down a little bit. So this little path I had as a possible path is not really working out too well. Seems like we're going to probably sit here in consolidation a bit longer, honestly. If I were to remove all these point of views, right, it looks like we're sitting here in consolidation after getting rejected off of this level. This 26,000, major level. Is a issue that we need to get through. This 26,000 resistance is definitely an issue that we need to get through. And as of right now, with the way things are looking and some macro backdrop, it looks like Trump's going to be using this opportunity to blitz the market, in the point of view of, hey, we're at all-time highs. Right now may be a good time to potentially release some of those crazy, chaotic deals and ideas that I have. So that way the market can pull back a little bit. And it could pull back. I can get more bids in, and my guys could get more bids in as well, at these lower levels. And then when I ultimately maybe cancel that idea that I'm sending out that will push the market lower, or we ultimately come to some form of agreement where I'm winning and the other country's losing, markets will just fly to the top again, right? Because in his point of view, I'm the greatest, and it'll be all good. It'll be all fine and dandy in 45 days, right? So that's one point of view. Or we could take a different point of view, a doom and gloom range of things where, hey, maybe we do have a meaningful pullback, kind of similar-ish to what happened in this range of, Liberation Day. And the reason why I don't think it will be this dramatic is because, one, we won't have the surprise effect that this did, right? Like, people knew Trump loved tariffs, and that's his favorite word, and XYZ, and what he wanted to do, and he wanted to, fix the trade imbalance is what he calls it. But I think people were still surprised to the depths of what he was willing to go with that tariff deal. And that was what created this huge move lower, this 25% plus move lower. Here, at this point of view, the tariff is not a new thing. The market's relatively, like, immune to it to an extent, right? right? Obviously, we're seeing a pullback here. We're down 1%, right? We're relatively immune to it, but not only that, but it's not as widespread as Liberation Day was. With Liberation Day was the people on those, the countries on those, on that, like that board that he had up. Some of us didn't even know that we really dealt with them at all, right? But this one, this current moment seems to be a bit more targeted. We're targeting EU because of the back and forth over him not allowing us to buy Denmark. I mean Greenland. Um, and we're also a little bit back and forth with China at the moment in the same Venezuela's gasoline scenario. So that's a whole other issue as well that I kind of wanted to take a look at and keep this macro point of view going. Like ultimately, all of this is world leaders butting heads, and they butting heads with Donald Trump is not an easy feat, I'm sure. So there's so much more still left to come from this story. Now, what we can do is we can prepare for either side of this fence, right? For all we know, here are like the playbooks of like possibilities, right? For all we know, EU said they're preparing, to fight back. We're having some issues. We're going to get some more tariffs. We get more tariffs. We get some more blood, probably, right? In the blood point of view, like it's not going to be good for cyclicals. In the event of like some of these smaller companies that maybe have issues, so maybe IWM pulls back a little bit lower. Maybe IWM finds its way and it does the retest at the 2600 mark because this continues to linger and it becomes a lingering problem amongst NASDAQ and the S&P as well, right? We get a pullback here after basically just touching highs 3-4 days ago. Like this last, what was that? We touched highs right here on this candle. That was like a Tuesday or something. Yeah, that was just this past Tuesday or something. Yeah, the 13th. So yeah, I mean, a pullback here is not necessarily a bad thing as well, right? Like we've been, like aside from this range of a nice pullback, 5%. Like what is 5%? That's nothing. 5% down is nothing. I mean, it creates an opportunity for buyers to step in, but again, ultimately nothing. So I'm thinking, if we do continue with these headlines of tariff this, tariff that we can see maybe a cool 5 to 7%, pullback here across the broader market. 5 to 7. Oh, that's pretty low. Hold on. Let me. 5 to 7% puts like at 64.50 range. I mean, that definitely wouldn't be at the end of the world again. But it also wouldn't be great, especially people positioned in the high beta names, right? Names that are really amplified by the market of the overall direction of the market. And we're at the whim of what the heck is about to come out of this. We don't really know. So all we can do is kind of plan for it. If we see more blood, if the VIX continues to rise. Actually, now that I think about it, maybe this was why the VIX was having some issues, right? So this is what I call the volatility complex. And the VIX shows us the amount of people, betting. And that's what this graph one is, right? The amount of people betting on, volatility to return. Volatility comes in the point of of people generally expressing the fear in the market, right? And it's a form of hedging for that fear. This volatility kind of is the volatility, the VIX, VIX index, kind of gives us that point of view. And the VVIX gives us a similar point of view of the volatility of the volatility. So it's a second derivative kind of product that gives us the head start of the head start, right? Of the head start. So the volatility is what's happening right now in the underlying market, the fears that are happening right now as well. And then the VVIX kind of shows you the volatility of the VIX itself, which then kind of gives you the heads up of, the VVIX tends to move first, right? Because that's where people are placing and closing positions and putting equity and putting capital to work to question some of these things. And as more and more people are placing more positions in the VIX itself, the VVIX moves more. So the VVIX tends to move first and a bit more aggressively as well, right? As you can see here, right? The same like consolidation zone of like calmness that we had from the end of December into basically just this past week is similar to the same period over here, right? On the right-hand side, if you're following on me on this side, right? Because you see every single cursor is connected in this point of view right here. So, so if I were to change these all to daily, all these graphs to daily, now you can see exactly where all these things are and how they're correlating. So as the VVIX was doing a little bit more consolidation here at the 90 range, at the base that we're seeing, we saw it expand much more aggressively compared to as we see how it expands over here in the VIX itself. So that was one of the concerns I had this week. I put on a hedge, and the hedge kind of died out a bit very quickly. I was able to use it and get some gains off of it, right? I locked in profit in that hedge in a way to protect the downside, but I did close it ultimately, and it seems like we've got some more fear. So if you ask me, Monday markets close, but by the time Tuesday comes around, unless there's some other news like refuting some of these geopolitical tensions that we're having right now, along with like, oh my God, there's so much going on geopolitically, right? We got China with what's going on over there. That's still something to be concerned about, guys. Don't think because no news has come out about XYZ or whatever it is that that it's not a thing, right? It's still very much a thing, and something to be concerned and something to keep an eye out for in your risk parameters, especially if you're kind of holding positions for extended periods of times. That's one. So always keep a lookout for China, because a lot of times things that they do, the adjustments that they make, has a direct effect with us, right? They may come out and say something about, just silver, right? They're gonna, I think as of recent, they just recently cut back their the capital, or they increased the capital requirements to go long on silver and in their markets, right? That whole thing led to like a 5% down day on silver, more volatility, right? So if you can sit through this volatility, and some of these like more macro products like metals and maybe global equities, I think you could be in a great space to be able to print this year and print like new highs in a very meaningful way. But yeah, as of right now, these two indicators are showing me that, hey, like as of recent, the VIX has calmed down a bit, and the VVIX a bit, barely 3-4% off the highs, but I'm still lightly concerned here, and I may be looking to put on some more positions. If we get back above this 104 VVIX, I may be looking to figure out another hedge position to figure out how I can protect myself. So yeah, these other bottom two charts are other little ratio charts. The SPY divided by the VIX, right, shows the relative ratio movement of the S&P 500 compared to the VIX, right? So if the S&P is doing much better than the VIX itself, well, then that means that this blue chart over here in the bottom left will trend higher as the VIX drips lower, and the S&P 500 can gain higher. So that's something to keep in mind, right? So if this another viewpoint, technically, as a technician, I would say, the fact that this chart is drifting lower from Christmas all the way down, it's not a good view, right? It's not really a good view. So that's something that I'm keeping my eyes out for. I'm kind of priming for a few things to, protect downside risk here, or be in assets that aren't, really that susceptible to this downside risk here, such as bonds. Um, Actually, I think that I take that back. Bonds are still susceptible here. Really, the best thing, in all honesty, is to just have a hedge or be out the market as a whole, right? Like lower your position exposure to a bearable amount to where the money lost is negligible, effectively. Um, that's kind of, but that's also a risk within itself too, because you lower your risk, you lower your capital exposure too low. You end up getting to the point where if markets do come back around, if markets do make another move, it'll be great. I mean, sorry, it'll suck in a way because you're not, maybe you lowered your capital allocation from what was maybe 100 grand exposure of your $500,000 portfolio, or whatever the figure is. Yeah, you lower your exposure so much to the point where now when the market does seem to get a bit better, you lowered your exposure at great value buys, and then now you're forced to rebuy back here at these higher elevated levels, because you've been long for multiple months prior to that. And even though we did have a pullback of 5 to 7% maybe on the indexes, that's still 10% higher than where you had those original buys at from the previous level exposure. So it's something where you may want to dance within both fields. Maybe you could reduce your current exposure, yes, by a little bit, by a reasonable amount, but then also maybe put on a hedge so that you could create new capital in the meantime. Um, that's something to take as a point of view, and you can go from there. And then this other piece here. This is the correlation index. The correlation, to my understanding of the correlation index, and also to how I use it. I use it to see like the overall breadth of the market, meaning, right, when, excuse me, using this 1 month implied correlation index basically shows like over the last month, like what majority or what in totality of the equities on the market are moving in the same direction and within the same like amplitude or magnitude of that direction, right? So if all stocks are down because the whole overall market is just shitty and it's just not moving well, then the correlation will be explosive, right? It will be explosive because all of the names are moving in that same direction. In other case, right, we seem to be at some form of a support here where, hey, right now equities are not all moving in the same direction. There seems to be a targeted segment of the market that is moving in the same direction. But as of late, it has not been an issue, I guess a widespread issue of the overall breadth of the market. Also because we've had some great cyclical growth as of late within the markets as well. Let me see if I could find that chart somewhere. Damn, I don't have it in here. I have to have it in here, man. No way, man. Dang it, where the heck is it? I'm gonna find it. Oh, all while we have earnings. Come on, guys, we got earnings. Like this is really the second week kind of earnings here, guys. Like this is not good to be in this like situation right now. I'm trying to find that graph from the CBOE, or is it Deutsche Bank? Which one is it? Damn it! It has the correlation between um, cyclicals and like mainstream tech and other pieces here. So I'm gonna find it. I'm gonna find it. I'm gonna find it. I got you guys. Boom. Right? And I believe just last week, this graph was not looking like this. When I saw that last report from Deutsche Bank, like showing what was going on, you could see how much the catch up was in this, like showing how the cyclical growth, right? These names that cyclicals basically like names that do extremely well when the market does well, but aside from that, when the market is not doing particularly like the best, they don't tend to appreciate rapidly. They more so trend in this sideways, you know, point of view that's like not really explosive or conducive for it. So I'm trying to find this. There it is. So this is basically like last week, right? So let me see if I can find this other one. So boom, this was last week's report, right? Where you see how like cyclicals are trending up, and mega cap growth and tech are trending down a bit, but it was nowhere near as this, right? You see how things are trending, and I've been talking about cyclicals since basically kind of mid-November, right? When you start seeing names that don't rally all of a sudden start to rally, this is where it becomes important to look at that. Um, and you're looking at it like, holy, the cyclicals are about to probably flip mega cap in terms of like positioning, right? Like where this is obviously the growth of where people are positioning, and where things are going, but I mean, it includes consumer cyclicals, industrial cyclicals, financials, energies, and materials. That's what's in the cyclicals names. So honestly, this could create some great buys for some names, especially if we have some more of this macro fire at our heads right now. But I still believe, that all in all, like markets are doing pretty good. Was it this one? No, that's a different report. I feel like a lot of the times I'm just sitting here trying to find a report that's in my head, but I need to show you all. you know? Hmm. Oh, this one was also something super huge. I'm forgetting this guy's name right now, but dang, I shouldn't be forgetting his name. I should be paying respects. But he puts together some of the awesome, like some super awesome charts of data, and it kind of gives me a good POV. I think his name is like TJ. I think. Don't kill me. What's this guy? JC, not TJ. So JC charts. He kind of talks about like what happens in 2025, what's going on in the world. Like I kind of want to go through a few of these because he snapped with this, and kind of talked about what where we're looking at, how kind of laid it out, what's concerning, right? So this was I thought was something that was really cool. In this chart, he's showing us the juniors, right? So these are in the NASDAQ. The QQQJ are basically in the NASDAQ. It is the remaining 100 companies that aren't the top 100, right? So these are kind of the Zooms of the world, right? The smaller mega cap companies, but are still mega caps in the net, or not really saying mega caps, but still like larger cap companies. And it's showing that this continues explanation of breadth. Like it's not just the big guys that are moving. And actually, you'll see later that the big guys aren't really quite moving as well as they should be. So this is large cap tech versus the S&P, as you can see, right? And small cap tech, again, also versus the S&P, but this is the small cap index. So the S&P is 600, right? So tech as a whole has been lightly drifting lower after making new highs, basically November, right? So if we look at this point of view, the XOKSPY, the PSC TSML, that ratio index of large cap tech versus the S&P, and then small cap tech versus the S&P, you could see it's peaked basically beginning November for small cap. It peaked maybe mid to late October for large cap tech, right? And that goes back to what we just spoke about with this, right? So it gives you that heads up. Like, look at this. This Z-score right here literally gives you the heads up on mega cap tech because it peaks in positioning early October, y'all. The positioning came first, then the price of the asset, and then, right? Like, this is why data in trading is in being a capital allocator is so important. It's so important, right? Like we saw the peak happen before. Okay. And then now let's take a look at what actually happened in the equity asset itself, right? So let's go back to the futures. Let's see, whatever, NASDAQ, flip back to Paragon real quick. Cool. And now we're talking about October of last year. Look, guys, price peaked October. I'm not trying to come in like a bear here, right? I'm definitely not a bear, but if you faded this October, I mean, I was a part of this fade for sure. And then faded it, long cyclicals, long metals, and just sat back and enjoyed yourself, like, out of QQQ, out of, high debt companies that maybe aren't really doing too hot. I mean, I guess that's not the case because IWM has done baller move. Like a true baller move with the tailwinds of a new Fed president. That whole issue also is another thing with the whole bringing up criminal charges against Jerome Powell. That's definitely another thing within itself. That's a whole another issue. Um, we still got Venezuela as a potential question mark. It's like what's going to happen or what's going to come out of that scenario. We also have Trump talking about how he wants to take Colombia as well next. Like there's a lot of stuff going on in the macro side of things. So much so that I'm lightly concerned with equities positioning for the shorter term, right? Like maybe heading into February, the first few weeks of the year we're okay, but we're heading into February and we're gonna have some headwinds, some issues coming down the pike. But hey, with all the geopolitical issues, dollar down a little bit back into 98. Ooh, that was loud. Um, you take a peek at the metals, and boom, we're printing new highs. And they say, "Oh, it's not possible. We can't go any higher." Da da da. Rah 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 rah. XYZ. We're going higher every time. Silver back at highs. I gotta go on the monthly chart now to just try to oh my goodness, this is beautiful. Copper as well. Copper's doing this thing up 1%. And that's been pretty cool too, seeing copper do its thing. Platinum also continuing to do its thing, right? It's had its issues in terms of volatility, right? Like downside days, down 5%, down whatever. But I think overall, it's done pretty good. And then, also geopolitical issues with Iran. I don't really know what's happening over there, honestly. I just know that something's going on, right? Like something's going on. Um, and let me just see. Got a ton of stuff going on. Sorry, guys, I'm just checking a few pieces here. Just trying to see. What's going on? Okay. Got it. Yeah. So you see more metals doing this thing in this global scenario. If we come down to like some of the sections that I have kind of partitioned out, like I can see that we got a few pieces kind of working here together. With we got the data compute complex doing pretty well. Um, Again, not really sure how well it will do in a confused macro environment right now, but it does seem that names like Wolf based out around $10 and now want to go a bit higher. CleanSpark, Bitfarms, right? These are all names that seem to have potentially based out. Um, Iron's already kind of doing this thing, making its move out. We hit some price targets relatively quickly. And then Cypher maybe following suit. They tend to run together. I do think right now Iron is moving a bit better than Cypher mining is, but I mean, in this case, I'd say probably Cypher may be the better buy right now, simply because it hasn't quite moved too far off the base compared to Iron. Then we got the Space Tech ASTS making stupid moves this past week. And Intuitive Machines, Lunar, also doing a massive move. It's kind of funny because like you draw up these things and you say, okay, this is where a price could potentially go, and then you're wrong, and then you're wrong again, and then you're effectively right. Right. So that's kind of where people are like, oh, how'd you know it was going to do that? I didn't know. I just knew that it was probable for it to occur. And it may not have happened this time, which it didn't. And it may not have happened the second time, because again, it didn't. But there will be a time roughly that comes shortly after, or that comes eventually, and it will do it. Right? Because of all the other, secular reasonings and winds and all these other pieces that are coming together as to why space tech is being so important, right? Where we have names like SATS has gone absolutely bonanza this past, like, what? Like half a year, basically. And if you were able to grab the agent report from a taller time, right? So let's check some of the what? Where the heck is it? Hold on. Let me load the site real quick. Oh, I'm pretty bad at this. It's almost like because I'm talking so much that like all the information sits in my head in a way, and then I try to like bring it out, but trying to go find where that information sits is the more difficult part. Oh, here we go. So let's switch to this tab real quick. So last year, or actually not last year, November of 2024, I wrote up a report talking about, Trump versus the Kamala trade, why I liked Twilio at the time. And then what came out of that, taking a trade from 60 to 90, what is that? Yeah, 60 to like 94 in just a couple weeks. But really, the story here is the global star. GSAT recently announced a significant expansion of the partnership with Apple, securing $1.1 billion in services deal. And it sparked a nearly 30% rally in GSAT. And the reason why I liked it really was because of it ended up being a market beta trade, in my point of view, for people looking to get space industry exposure, similar to SpaceX, right, with what they have in the product base of Starlink. But it looks like Globalstar was looking to offer some kind of satellite cell phone positioning, and it kind of has. All right, so it went into what was going on. It also did a reverse merger, I believe, a reverse split. Sorry, where the stock basically went, after a multi-year basing period, sitting here at $1.30, right? Did this huge, like reversal, kind of. I think it was like a 10-1, if I'm not mistaken. And was it? Let's see where it was. No, 1-15 reversal that we had. And then now the name is up into the $60 range. So we had 10-15 from a $1.60. If we were to take that back and put it into that, it's 4x, because the pre-reverse split share price is probably $4. It's $4 right now. Yeah. So it went from 139 into roughly $4 since that report in November of 2024. And what we saw there was something super, super important. So that, and it's been on this trend now for quite some time as well, with what we've seen in the space tech. Other companies such as Rocket Lab have done like bonkers, right? We see what SpaceX is doing as well as a private company, also bonkers. And some other companies that are maybe a bit newer to the point of view or to the landscape of things, such as RDW, and even like LUNR, BKSY as well. I think a lot of that space could be taken advantage of, especially with the fact that like where it prices or where it trades historically. So that's something to keep an eye on for. I feel like the same themes are the same themes, right? Like nuclear is a major, major theme still for this year. The playbook's here right in front of us. I still like UEC as the main winner here for assets, or for the uranium trade per se. So that's something that I'm really super interested in, that I want to keep an eye out for. But yeah, I mean, nothing really new here for you guys, right? I feel like I'm talking about the same stuff because the theme is the theme, right? It's kind of like sit back, hold the right names, and print. Hold the right name. If you're gonna do options, hold the right name with some duration and print, right? FCX, one of my favorite names on the year. We're up 13.5% year to date on this bad boy. Been in this name for quite some time as well. I think sometime like November, December-ish. But yeah, let's get back to the chart labs. Then we see what's happened within software and semiconductors, that huge divergence in software. Tons of names are peaking really because AI is in a way displacing the need for some of these softwares. And with people who actually know how to use them, um, hiring the right person could be critical for the actual use case and application of these softwares. Similar to how, if we just take a look at the last month on software as a whole, it looks pretty bad. This is a bit blurry, but it looks pretty bad. Like, look at this, pretty bad. Adobe, in the uh, Intuit, ServiceNow, Datadog also having some issues. HubSpot issues. Zoom, Autodesk, right? Workday, like all these names, these software names are getting pooped on. Snowflake, Paycor, I think. Yeah, that's this one. Not doing too well. And maybe just take a peek at the cycles, right? Understand where we are on the length side of things, right? We seem to be kind of, what's the medium here? A median here. We seem to be pretty close to some of the longer runs, right? Only a few runs are a bit longer than where we currently are, right? This one from 2012 to 18. This run from 2003 to basically the '08. This run from 91 into 99. That was crazy. 18 months of upward. Wow. And then wow. Right? I mean, it doesn't go back as far as history does, right? It starts with the 70s, but it's still a good point of view to see where we are in the grand scheme of things. What were they doing in the 80s? Boy, oh boy, wow. Okay, I need to like connect back some dots and see what's going on in the 80s. Why am I blanking right now, particularly with this piece in the 80s? Oh man. Blah, blah, blah. Let's see. Oh, back to the chart. Let's see. This one, we got tons of these indexes at highs, 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 highs. Like, come on. Like, this is insane. The small caps finally doing well, right? They're doing well as well compared to the NASDAQs. Mid caps, highs. Banks, highs, right? And more specifically, the investment banks as opposed to the consumer banks recently. Oh, let's talk a bit about earnings. Earnings, last week, we had bank earnings. I think the bank earnings came back okay. More particularly, JP Morgan and Citi were doing better than a Wells Fargo. Wells Fargo tends to miss every now and again. I don't think it's anywhere near as robust as JP Morgan or as a Citibank. Wells Fargo is still trying to get their footing. I think as a bank, I don't particularly like Wells Fargo. It just seems to miss from time to time. But as a part of the bigger banks, though, I mean, it's one of the bigger banks regardless. And I do think that they just recently kind of finished their judgment or they got in trouble for discrimination and loan loan discrimination to the max, and they were placed under like some more tight rules, um, and more scrutiny, just some more eyes on their operations. So I think that definitely plays a role into why they maybe aren't doing too well, because they're not really taking the risk and maybe giving out some more subprime credit in some ways that could potentially yield you higher yield. But again, that risk, I don't know. I'm not Wells Fargo, like I'm not reading Wells Fargo earnings minutes, to be fair. Maybe I should, but just not necessarily something that I'm that interested in. Investment banks doing much better. You've seen the Goldman Sachs, the Morgan Stanleys, those guys doing much better. More particularly because the backdrop that we have for M&A is really good, right? Like people are lots of M&A activities are happening right now, and there's even more chatter about the IPO market stepping in to come help us out. We've had tons and tons of regulation and rules and stipulations placed on our banks as of late. I mean, even since like 2008 and beyond, it shrank the public market by half, right? We had 8 to almost 9,000 companies in the public market, and now we're sitting close to like just above 4,000, right? That's kind of a point of view as to where, is this the markets that we're trying to build, where people complain that these companies are too big and this might be this, that, and the other. But in the other ways, we overregulate sometimes that cause these smaller companies to actually fail, which then leads to lack of competition, and then leads back to the loop of these bigger companies that only the bigger companies have to regulate them. We have to put, you know what I mean? So it kind of, in a way, doesn't really work sometimes when we, put a little bit too many rules and stipulations into what can be done, what shouldn't be done, and so on. And it's, originally shared as a protection point of view, but I think a lot of times in the long run, it ends up hurting, right? Like we look at Spirit Airlines, who's filed for bankruptcy probably 3-4 times now. They've blocked some of the slightly larger airlines from buying it and growing their business, such as JetBlue. So much so that now JetBlue is struggling individually as one of the slightly less premium airlines, right? And it just sucks to see that that kind of situation come about, because I think the natural M&A of that, yes, would have again, reduced the amount of premium, or not premium, the amount of like cheaper flight economy. But what was the alternative? They go bankrupt? And we wait 5 more years for another airline to try and step into the space after basically forgetting that this space tends to die very quickly, and that the airlines are a capital burn, or very capital intensive industry, and they burn. And right, so it's like, yes, you're trying to protect competition from monopolies and XYZ, but in that same breath, are you actually? Because you're kind of just taking the shotgun to the other companies that can't keep up. What's that going to do? Delta's going to get more market share. American Airlines is going to get more market share. United Airlines is going to get more market. The bigger guys are just going to get bigger, because people still are going to have to fly, and fine, they'll pay an extra $75, or whatever that ticket differential is. But like, people are either gonna not fly because they want to save their money, and they'll actually save their money, fine. Maybe they'll drive a bit more, or they're just gonna pay the extra money regardless, right? And I think that's kind of the point of view that I think individuals such as, when Lena Khan was head of the FTC, weren't necessarily thought of, right? Like, I get it. Break down big business, allow competition to flourish, but in a lot of cases, it's not allowing competition to flourish. You're effectively leading them to their grave. So yeah. So that, I'm gonna segue that into, I believe Jeffries came out saying that there's some pretty interesting second derivative to third derivative things that could come about, and it's that Ozempic and GLP-1s could lead to a general 10% reduction in weight of passengers that could then lead to another 2% savings on gas spend that finds its way into a 4% earnings gain for airlines. And I saw that and I'm like, wow, that's crazy to think about, but that's so true. So, like, looking at that and looking at some of the more premium airlines, is this a scenario where airlines kind of step into some more bullish nature? Right? Like, have they been down in the gutter for long enough where airlines find a way to be more profitable in within the upcoming year as more and more people travel? Right? Like, is this something that intrigues us further? Like, Delta is, I believe, hands down one of the most profitable ones off rip. I mean, shoot, they even give out a dividend. It's only 1%, but I mean, hey, like, we could be onto something here. They got a net margin of 7.6 right now. They've seen 12.7 before. It seems like they have a Q1 slump. So it'll be pretty interesting to see what these earnings could be chefed up at the end of Q1 of this year, if maybe people are actually traveling more or not. Or if that savings that the analyst from Jeffries put together is a real thing, right? Especially with the ease of use of getting GLP, right? I believe at one point it was a shot. Now you can take it orally, just pop it like a vitamin, and you're good to go. So yeah. But I'd say generally that's here. That's pretty much it for the markets. There's tons and tons more news to come out this week, but I think right now I'm gonna sit back a bit and just kind of watch life occur in some way. Doesn't seem like I'm gonna be doing too much positioning. We still have a ton of uncertainty right now, so I don't know if I want to join that. But that's pretty much it for me. For the agent, I shall catch you guys next time. Peace. Have a blessed week.